Doing it a little bit differently. We're actually going to bring thing number four, our investment knowledge, advice, tips section. Discipline, emotions are obviously a big part of investing, Gary. Our question coming to you this week, thing number four this time, Gary, how do you maintain discipline while investing?
So, Rob, let's take this question apart in two different ways. First of all, let's acknowledge that it is completely normal and reasonable for people to have strong emotions when they have money on the line, right? This is a normal thing. And so, the example, my old partner from Silver Arrow, Raji Kabaz, and I, we used to talk to people about one of the things that's really difficult about being an investor is there are no minor leagues. So, think about like if you were in ancient Rome and you were a gladiator, what you could do is you could practice with a wooden sword, right? You could go to a gladiator school, or in some cases, slaves were forced into a gladiator school, but you got to practice and train with a wooden sword and learn your craft, and then they might start you out in some of like the side arenas that were where you'd fight lower level opponents, but generally by the time you would set foot on the sands of the Colosseum in Rome with a steel sword, um, you'd had some experience. Well, there's no minor leagues in the stock market. Imagine, being a first-time investor and you put capital to work, and people don't often think about this, but guess who's on the other side of that trade? It could be somebody like me and I've done nothing but this for 3.5 decades, often working 15-hour days, often working 7 days a week. Um, it could be Citadel or Millennium on the other side. It could be Bill Ackman on the other side of your trade. So you don't know that, but you're going up in the stock market against the very best the minute you have capital at risk, and it's real money, right? You're playing with real money. It's not a game. And, it can be life-changing money, both in the positive and negative direction. And so I think it's normal to have emotions. When things go against you, you can feel sick to your stomach. It is a horrible feeling. In fact, Rob, let me ask you, when you've got money invested in the stock market, what kind of feelings do you have about it?
Early days prior to the five things, honestly, it was crapshoot, right? And I think that's where the anxiety builds for novice beginner investors, right? Is that they don't have much guidance. You're kind of throwing a dart at the wall, see what you hit. You hit some, you probably miss more than others, right? Because it's not a fair playing field at the end of the day for a variety of different reasons, right? So I think that's where the consistency, though, speaking the language, staying in tune with the market, seeing how stocks move based on time of year, when earnings come out, what those earnings say, understanding product market fit, and just how to actually analyze businesses early on, right? Those are repetitive things that you need to do over and over and over again to build up skills to understand the market to where now I do feel much more comfortable, or I know, hey, I'm playing the long game. I don't need to be tied to my phone every single day and the ebbs and flows of the market. In that, hey, I'm confident with my positions. And again, if we start to zoom out, instead of looking at the 5% loss on a day, obviously we don't want that to happen ever, but you start to pull back, right? And you see, okay, 10, 15% gains over the last 12 months or whatever the period is. Which Gary kind of leads me to my next question on this topic. I mean, for novices, beginners, how crucial is it when you talk about that discipline, understanding that this is a long-term game, or you should be approaching investing with long-term goals in mind?
I, I think there are different trading strategies, and it's okay to be a short-term trader, but the key thing is you need to master your craft. And so I want to reframe that question, Rob, and talk about, where you were just a couple of years ago in your investing and why you had emotions and what I do about that and the difference between those two states and how it can be used to make money. So when you first started, um, it was basically a casino. You didn't know what you were investing in. You didn't have research on it. You basically were just throwing money at it, kind of like putting chips down on the craps table. Maybe you make a lot of money, maybe you lose a lot of money, who knows? And, there was sort of that excitement about it. Um, what I do is very different. I spend an enormous amount of time reading, researching. It's decades of experience where I know I've seen situations like this before. These situations worked, these ones didn't. And so, the interesting thing is people often say, well, how do you maintain so much calm? And the answer is sort of, I don't, because I have the same emotions as everybody else. I have the same feelings as everybody else. The key thing is to to be able to identify that, to be emotionally aware and realize, okay, yeah, my stomach is up in my throat because I'm worried, I'm upset, I have these feelings. And then once you consciously identify those feelings, you can put them aside. And I say, okay, I feel anxious, I feel upset, I feel worried. Um, but those feelings don't have to drive my behavior, and your behavior is the only thing that matters. And so, what I can do in those moments is I set the feelings aside and I go back to the research. I go back to the rational reasons why I was in the stock. And if the stock is down, if it's gone against me, has it done so for a reason that, invalidates my thesis, in which case I have to take the loss and sell? Or has it done so because of a misunderstanding and other people have it wrong? And, the market is reacting to something that's unimportant or temporary. And in situations like that, I may buy more of something when it's down, even if I don't feel good about it. Uh, the ability to put those feelings aside and go to actual research and figure out, does this validate my thesis or invalidate it? And if I were coming to this clean today, would I be buying it or selling it today? That's the kind of discipline that takes a long time to master, and to have the investment knowledge to know, which end of that to be on, and whether you're making good decisions or bad decisions over time. That takes a long time. And so you have to be willing to invest not only in emotional control, but, like any athlete, getting the reps, looking at many, many situations and investing across a wide range of industries. And just look and reading these reports again and again and again until you start to see the patterns.
Gary, I want to talk a little bit too about consistency and time. Two key factors for investing. Why are those two key terms that can kind of de-stress investors that are looking and putting consistency and time at the forefront of their investing strategy?
Well, the reason consistency is so important is because investing is a discipline. Um, I talk to people often, and people who aren't professional investors will often say, hey, do you have any investment tips? Like they think we have this like weird secret knowledge, and I could almost like that Wall Street movie, Blue Anaconda Loves Horseshoe, or whatever it is. Um, like we're going to whisper something and they're going to make 40% tomorrow. But it doesn't work that way. It is a lot of 12, 13, 15-hour days of reading, researching, calling, being on calls, gathering information, analyzing it, sitting up late, building models. Um, it is a discipline, and you need to be consistent to do that. You also need to have consistency with your investment thesis. One of the ways you really get hurt is having that creeping investment thesis, kind of one of those things where, oh, I'm buying this because it has really high growth and the margins are going to get better. And then, the growth is good, but the margins don't get better. And you're like, well, but the growth is still good. And then the growth goes away and the margins aren't better. And you say, yeah, but the stock is down now, it's really cheap. And you just sort of have the shifting thesis where no matter what happens, you decide, oh, this is what I wanted it to be. It's still good.
Right.
You need to be disciplined to say, wait, this is different from what I had planned. It's time to get out. Or, or to have the intestinal fortitude to say, wait, no, this is temporary. Everyone else has it wrong. And to know to buy more when something's gone against you. These are things that are very difficult to do. And that consistency is the issue. Time, in my opinion, time is one of the biggest advantages deep knowledge investing has. We call it time arbitrage. And the reason that matters is so much of the money on Wall Street right now is very short term oriented. It's only focused on, where a stock or an option is going to be this week, or, whether they think the company will meet or beat earnings this particular quarter. Um, when we start to look out 3 to 5 years and say, wait, where can we make double our money, triple our money, quadruple our money, or more at times, over a 3 to 5 year period, and don't worry so much about whether the current quarter is good. What we're doing is we're shifting our focus to the place where most investors aren't looking. And that, I think, that gives us an advantage over time. Now, for people who, are saying, well, wait, what's the downside of it? Because everything has a give and take. The downside of that is we're willing to take a greater amount of short-term volatility. I don't concern myself with that. And there are investors who disagree with that. And if you go to, highly leveraged places like Citadel or Millennium, it doesn't work for them because they're using a lot of leverage. And so they have to have a low volatility model. That does not make me right and does not make them wrong. What it means is you need to have the discipline to say, this is my strategy. This is how I'm going to make money in my portfolio and in this name, and follow it. And what they do works for them. What I do works for me. But by using time arbitrage and taking a longer view of things, it gives deep knowledge investing subscribers the opportunity to make long-term huge amounts of money when other people are thinking about which direction is the next 5% going to be.
Yeah, adaptability, Gary, and time, starting early or now or in the next week, right? Getting familiar, I think is super helpful. I know that's one of the things, just my confidence is the time, right? And having these conversations, putting in the reps and then you get an outcome like we were talking about Michigan very early, very, very similar, right? 3, 4 yards at a time,
Yeah.
similar with investing because you're hitting more consistently, you know what to look for. And you also know that, hey, there might be market misses, like you're saying. It's not a cause of panic. It's that, okay, this is actually a great opportunity for us as well. Last question on this topic,
Wait.
Gary. Just
Oh,
want to talk
Rob,
about, or yeah, go
before
ahead.
we move on, let's address those two things you just talked about because they're both really important.
Yeah.
Uh, Adaptability is crucial. And I understand that what I'm about to say will sound like I'm contradicting what I said before. Before I talked about being a disciplined investor, knowing your strategy, knowing what you do. But adaptability matters too. And so I'm going to give you a personal example. I started deep knowledge investing January 1st, 2020. At that time, I had never invested in gold, silver, Bitcoin. I'd done very little energy investing. These are now the majority of my portfolio,
Mm-hmm.
right? Because the situation changed,
Right.
circumstances changed. And so I had to learn about new industries, new skills. I had to start, I have never, early in my career, my first few decades, I wasn't focused on the Federal Reserve, on inflation. I wasn't, watching Federal Reserve press conferences or reading CPI reports and taking them apart and analyzing them. These were all new for me, but the environment changed. And so I needed a new skill set. Now, you can complain about it, not profitable, or you can just say, okay, I'm going to read and learn and study and follow new people and look for new sources of information and do that. I also think starting early is really important. To paraphrase an old expression, the best time to start investing is when you're young. The second best time is now. Uh, Over the long run, you tend to do really well if you invest well. And we all have down years. We all have down periods. It's happened to the very best investors in the world. It's certainly happened to me. Nobody's above that. But when you start early, you give yourself the opportunity to bounce back from these things and make a lot of money over time. So I think, those two things that you just brought up, and the reason I interrupted you on that is because these are crucial factors. And if you're a novice investor, these are things to think about and to start to understand, or at a minimum, if you don't want to do it yourself and you go to an investment advisor or you go to, if you come to Deep Knowledge Investing or another firm like ours, that's great, but ask these questions. Ask about the things that we're talking about and make sure you understand the answers. Make sure the person who's managing your money can articulate good answers to that. If they can, then, they're probably a good fit for you and they'll probably do a good job for you. But if you get nonsense answers, then that raises a red flag. And it doesn't mean the person you're dealing with is dishonest, but it does mean you need to ask more questions and figure out if you could or should get comfortable with the way your money is going to be managed where it is.
As Gary mentioned, we have our portfolio, Gary's current recommendations, position to minimize market risk, hedge your portfolio. That can come with a premium subscription on our website, $100 a month, and you'll have access to all existing positions when we buy, when we sell, and movement within the portfolio as Gary aligns us for future inflation, all the different things we talk about on the 5 things. And also, please don't hesitate to reach out through our Ask Gary feature on the website as well. Any questions that you might have, whether it's portfolio positions, investor knowledge, how do I do this? How do I do that? We'd love to hear from you. And a lot of times we'll take those into consideration when we're writing this 5 things. You might even see your question as one of our topics for the week.